Asian equities opened the week broadly higher in response to positive job and manufacturing data from the US on Friday. Also supporting sentiments was services PMI from China, which improved slightly from 56.1 to 56.2 January, hitting the highest levels since August. Overall, the Forex market is pretty steady throughout, with major pairs and crosses trapped in tight range. The markets experienced a strong rally in the euro and a steep sell-off in the yen last week. There is no sign of a reversal in these trends, and the main focus this week will be on how other major currencies will perform in reaction to a number of key events. That would include the Reserve Bank of Australia's meeting, which should hint on the change of a rate cut in the first half. Employment data from Australia, New Zealand and Canada will also be closely watched. Next, Bank of England Governor and current Bank of Canada Governor Mark Carney will appear before the UK Parliament for a hearing. If he affirms his stance on tolerating inflation above the bank's target range of 2 to 3%, the market could start to price in additional easing from the Bank of England and trigger a further rally in euro sterling. The European Central Bank meeting will be watched but shouldn't trigger much reaction unless President Draghi expresses concerns on the recent strength in the euro. In Japan, Finance Minister Aso said over the weekend that the weaker yen was a result of the policies aimed at ending deflation, but not the goal. He hit back at Europe's claim that the BNAC of Japan's move would contribute to a currency war, and said that Japan endured without complaining when the yen was strong as a result of the global financial crisis back in 2008. Aso also noted that there is no one in the government, the bureaucracy or the bank who has experience in anti-deflation policy, and Japan could only learn from history. Aso said the government is now imitating the Depression-era finance minister who told the Bank of Japan to underwrite government debts to fund deficit spending, which was then increased by as much as 34%. In the U.S., St. Louis Fed Bullard expressed his optimism that the U.S. unemployment rate would drop to low sevens by year-end and GDP would be at around 3%. And he claimed that should then be considered substantial improvement by the Fed in considering its policies. Regarding last week's job report, Bullard said that the 3-month average non-farm payroll growth of 200,000 is an encouraging sign. He noted that the Fed might think about scaling back from the open-ended asset purchase if there is some good data for a couple of months. And, if there is good signs, through the spring of this summer, the Fed could throttle back just a bit, without declaring the end of the third round of quantitative easing. Looking at the latest CFTC data for January 29, euro net positions continued to improve for another week, indicating accumulation is still in progress. Sharp deterioration was seen in Canadian dollar longs and sterling longs. Meanwhile, yen net shorts rose again, arguing that position adjustments might be over. Latest CFTC data showed euro net longs rose for another week to 27,400 contracts on January 29, compared to last week's 21,400. Yen net shorts rose again to 71,200, compared to last week's 64,000. Sterling net longs dropped for another week to 10,600, compared to last week's 17,900. It's been in steady decline after hitting the 2012 high of 37,300 back in